right. Good morning, Checkmate crew. Today is Wednesday, October 26, 2022. It is the opening bell here at the New York Stock Exchange. Okay, so something just went through for me. I put a market open order for my XLC puts, and it looks like I got out of my puts right at, let's see here. Let's see. Okay, it looks like I got out at a little bit over double. Okay, so not bad. Not bad. Okay, so the XLC play, that's the communications ETF, and it was just a lotto. Okay, I was just lottoing on some Google earnings. I had some puts, and it looks like it paid out. So made a little bit more than double as an overnight hold. That's not bad. Google had earnings. They apparently, quote unquote, missed the analysts' expectations. So who cares? I mean, okay, so this is just my view, guys. All right, you don't have to really take note of anything that I say, or in my opinion. But who cares what some analyst arbitrarily puts as the expectation for earnings? Okay, I couldn't care less. Now, if you actually go and look at Google's earnings, it really wasn't all that as bad as as they said it was. I mean, their revenues did go up. Okay, their revenues went up, and this is just an example. I'm not going to go over every earnings that this happens, but it tends to be that the media sensationalizes what happens. They said ad revenue was down. Oh, ad revenue's down. Ad revenue's down. That's a bad indicator for the economy. Well, no, because their ad revenue, if you look at it on a quarter ending September 30th basis from last year to this year, it's about the same, or actually a little bit more. Okay, their YouTube ads went down, and maybe that's what they're focusing on. Their YouTube ads and Google Network ads went down, but from their Google search, it actually went up. So overall, their ad revenue actually went up. So I'm not really sure what the squawking heads are talking about. It was slower growth than what Alphabet generally shows on a year-to-year basis. So growth is slowing. I'm not gonna, I won't deny that. But was it as bad as the media says it was, or how some of these guys on Twitter said it was? No, not really. Microsoft also had earnings too. They don't have a favorable reaction as well too. Microsoft is down as well, about 7%. A lot of people on Friday, Monday, and yesterday, a lot of retail went long on calls. So it's really funny how retail works and how they manage to always time the worst time to get in. That's as old as time, that phenomena. So right here, remember I told you guys record put volume right here. So retail got into puts at the lows, and then as the markets went up, they jumped into all these tech calls, especially on Google and on Microsoft. I guess they thought that this was too down and they were going to go up. That's what happens when you play 0 to 2 days till expiration options. It's just not a very sustainable way of building wealth. I mean, I know a handful, like literally a handful of people that actually do make money consistently. And I'm not talking about just a good month, a good year. Like, they've been doing this for, about 5 to 10 years on a consistent basis. But again, I can count the many of those amount of people all in one hand. Okay, I just know a handful of people that are good at that. It's really rare to get somebody who can actually consistently do well trading those types of short dated contracts. I mean, it is what it is. Again, for most people, it's just not a good way, a viable way of building long-term wealth. All right. But anyway, retail pile onto calls. Go figure. All right. So that's Google, Microsoft. We have Meta coming up, or Facebook, Meta, whatever they want to call themselves. I think that's today, if I remember correctly. Let's see here. I have it in the countdowns on our Discord. Yeah, we've got Meta. We got Ford. Oh, that's on our watch list. We got Ford after the bell today. And then tomorrow, Thursday, that's when we get a slew of earnings. We get McDonald's, which I'm going to be looking at. McDonald's actually is a very good ER for food. So you know how we have Pilgrim's Pride. You know, we've got all those the meat thesis. So I'm going to be looking at the McDonald's earnings. Caterpillar is also good to get a sense of what's going on in the industrial space. Cameco, which is a uranium play, which is one of the largest uranium producers in the world, also releases earnings tomorrow before the open. So McDonald's, Caterpillar, Cameco, those are the ones I'm going to be really looking at tomorrow before the opening bell. And then, of course, after the bell, we've got Apple, which is going to be huge. Pretty much, you know, is Apple doing QE on the QQQ or not? That's going to be huge. I'm going to be looking at that tomorrow after the bell. Amazon, and then of course Intel, which is also part of our plan. I'm going to be looking at that as well too. Friday, we've got all these oil companies reporting earnings. Chevron, which is, you know, as you guys know, is one of my favorite stocks for a long-term hold. They're going to be reporting earnings right before the opening bell on Friday, so I will be looking for that as well. Now, let's get back down to business. What's going on in the indices right now? We are seeing, oh, look at that. It's already trying to recover. We're already seeing the markets recovering despite the reaction to the ER, whatever you want to say, whatever opinion you may have about the ER. One thing is for sure, liquidity data. Okay, liquidity data really reigns supreme. That's usually one of the first things that turns whenever we see a market behavior change. One of the things I wanted to really point out was yesterday, we had our third day in a row of advances over declines. Okay, we just had the third day in a row of that. After we get 4 days in a row, we usually see a rally that can last a few weeks. We saw this in July. Remember, in July, we had those 4 days in a row right after July 4th weekend, and that set off a huge rally. It was a bear market rally, of course. You know, we went back down right afterwards, but it started a rally that wiped out a lot of put holders right here, right after the July 4th weekend. We had 4 positive days in a row, not just in the S&P 500 market, but also in junk bonds advanced decline line. It went up 4 days in a row. It still kept advancing even afterwards, even though the market pulled back. And that was the buy the dip opportunity right there. And remember, we took a few longs. I think we took a Baidu longs and some other short-term like hedging longs right here. And we saw this huge rally, multi-week rally. Okay, if we see 4 days in a row of that junk bonds ADL curling up, that means the junkiest, worst part of the bond market is starting to see risk on. Whenever you see that, okay, whenever you see that, that usually means that risk on is going to trickle into other places in the market. We're already seeing this actually in currencies. So generally the bond market turns, the currency market turns, and then you see the other risk on assets turn. Stocks are usually last. They're usually the most reactive. The proactive ones are usually the bond market and the currency markets. And actually, if you look at, for example, the British pound, right now the British pound is giving off a risk on signal. Okay, people love Rishi. The market loves Rishi. Okay, that new prime minister, he's an ex-Goldman banker, huge ally of the business world. Business loves it. Okay, the markets love this. Wall Street, the financial services apparatus, they love Rishi. Okay, so this is a good signal. Also, too, he kept one of his members. I don't know what they call it. It's like a cabinet member equivalent here in the United States. I believe it's the finance minister, but his last name is Hunt. Apparently, after it was announced that he was going to stay in the government, we saw the British pound rally, also to the euro. The euro also rallied too. So right now, the British pound and the euro are kind of like our risk on signals right now. Okay, so right now, euro, boom, above parity. Now we're back to above parity. Usually, the euro going up is not good for Euro Stoxx. However, times are different. Okay, so when the macro environment changes, how markets respond to certain data will also change. Okay, we can't always have the same mind frame all the time. Right now during these in these times, a rising euro is actually going to be good for a lot of the Euro stocks. Okay, and the reason for that, and DAX is up right now, so the reason for that is because a lot of the dollar-denominated accounts overseas in Europe, now people are going to invest that. Okay, so a lot of institutional investors during this time in Europe, they opened up dollar-denominated accounts and put their money in dollars while they were in Europe, to protect their buying power. All right, and so now that the euro is going up, less and less of those institutions are going to demand keeping dollars while they're in Europe. And so when it comes and gets back into the euros, they're going to be buying assets. And so we're already seeing a risk on signal coming from also the European equity markets. My plan still hasn't changed when it comes to the Euro stocks. I'm looking to short the Eurozone stocks when it gets to certain levels. I'm really looking at that 13,700, 13,800 on the DAX. If the DAX gets to about 13,700 or 13,800, I will initiate a short on FEZ, which is the ETF equivalent here. So my alert is set at 13,700 to 13,800 on the DAX. And when that happens, I will short FEZ. I will buy 3 to 6 month put spreads on FEZ when that happens. Okay, let's actually take a look at the chain on FEZ and see what it looks like. Okay, so that would be probably if it were to happen tomorrow, let's say, which it won't happen all at once. It'll probably take a couple of weeks, but January's or February's, okay? That would be about January's or February's if it happens soon. We do have nice skew. We got a very nice put skew here. Definitely put vertical debits, okay? The skew is nice. I like that. You can really harvest that IV. So, okay, so it looks like that's what I'm gonna do. I'm gonna be doing put vertical debit spreads 3 to 6 months out once DAX gets to about 13,700, 13,800. So that hasn't changed. Okay, so we just went over junk bonds. Again, junk bonds ADL, 3 days in a row of advances over declines. Currency markets also starting to show that risk on. Our New York high-low line, it was flat. Well, not flat, but it didn't go down as much yesterday. I believe yesterday it was down like minus 43. This is the cumulative line. So it only went down by 43, which is not that much, especially in the last few sessions. We've had minus 300, minus 400 days on the New York high low. Right now, the New York high low is starting positive for the day, which is very rare. Right here, New York high low in the background. You can see on my screen, I always have the New York high low current going on. So right now, it's a positive 23. It hasn't opened positive in a while. But who knows? It's all about closing prices, and whatever the high-low closes at, that's what gets added to this line. So if we start seeing this curl up, we might see a sustained bear market rally. If this actually turns up and actually goes above all its moving averages, well, that would be the start of the Moab signal, which is the mother of all buy the dips. That hasn't happened yet, okay? We're still, if the Moab were to happen, it will take weeks. It will take weeks for it to really play out, but not yet, okay? But if this does flatten out and starts curling upwards, we might see a sustained rally like we did back in July, August, okay? So if you guys are holding puts, you may want to just manage risk. I'm not telling you to sell your puts, just manage your risk effectively, okay? When you're wrong, get out. What's the most important part about your trading career is not really your gains, it's the losses you avoid. Okay, that's what keeps you in this business. All right, it's not the gains that you make, it's the losses you avoid. Okay, New York advanced decline. New York advanced decline is trying to make that higher high. We'll see if it continues. Also, the equal weighted is actually, it looks a lot stronger than the market cap weighted, which means there's broad participation in the markets, and a lot of this weakness is happening within the mega cap tech stocks, which is expected. I mean, we saw this coming. The mega cap tech stocks are kind of dragging performance, but the rest of the market is actually not doing as bad. And we knew that this was going to happen from our IVW to IVE ratio, our growth to value ratio. Our growth to value ratio has been going down, which means the Dow is favored, okay? Value stocks are going to outperform growth tech stocks, okay? So we've been monitoring this for a while now, okay? So it is expected. But yes, it looks like the market breadth is actually it's not as bad. It's really not as bad. So we'll see. Okay. Already we're seeing our liquidity data is stabilizing. I wouldn't say it's doing well, but one more day of an advance on the junk bonds ADL though, then that would be a positive. But right now it's stabilizing. Currency markets are already showing risk on. Okay, so we're already starting to see the start of this prolonged bear market rally. All right, so I do think that whatever rally comes out of this is still going to be a bear market rally. I mean, I'm not seeing any huge increases. Only way I would say, okay, this is no longer a bear market rally. This is actually a real rally. Again, we would have to see all of this curl up and get over all its moving averages, make a higher high or a higher low, and then keep continuing. Okay, we would need to see that on the New York high low line, also on the junk bonds ADL line. We are nowhere closer. We're close to the lows. Okay, this has a lot of room to go. 4 days in a row does not necessarily mean it's a Moab. Okay, 4 days in a row just means we might have a prolonged bear market rally, and I think that's what this is. It's going to be a bear market rally. Okay, I'm still looking to short when I get to the levels. Again, FEZ when DAX gets to 13,700. Also SPX. My plan still hasn't changed. It does look like liquidity data is stabilizing, so I'm no longer going to be looking at 3,900 to short. I'm going to be looking more at that 41.25, our original plan. So that original plan is now still a go. 41.25 to 41.50 zone. That is where I buy 3 to 6 month put spreads. I will probably buy it on the QQQ if our growth to value ratio chart keeps pointing down. It means that tech is going to underperform, so I'll buy the put spreads on QQQ. All right, I'll buy it on QQQ. So once the SPX gets to that level, that 4,125 level. All right, so that is my plan. All right. Crypto. Let's talk about crypto for a second. Okay, so there's some interesting developments going on with crypto. Crypto open interest is actually going back up. Remember how I said once it gets to past 7 billion, it starts getting interesting? We're at 7.4 billion. Oh, come on, dude. Are you serious? Oh, okay. You know what? Sometimes it's like this. Whenever markets open, Deribit and that GVol site sometimes has these issues. I don't know what it is. I don't know if it's a traffic or what. But anyway, finally it's working. Okay, 7.4 billion. We're back to 7.4 billion, which is around the highs. Around the highs, it was. Let's look at notional value. It was around like, you know, it got up to 8 billion. Remember in the summer, right before that merge talk and all that merge rumors and all the gambling around the merge. So we're starting to get back up there. Okay, 7.4. So now it looks like more and more that options could have a pull on price. We've had a lot of options orders coming in. A lot of it is shorter dated, like, you know, end of October, early November. It does look like speculators are coming back in. Okay, and a lot of it is speculators. It's non-block trades. Okay, look at that. 75% of it is regular trades. I mean, that doesn't mean these are institutions. It could just be very, very small orders that the institutions are trying to hide. It could be that. It could be that. So we don't know. Okay, I would presume though that a lot of these option volumes right now, especially since they're short dated, I would presume a lot of that is retail though. Okay, but a lot of value came in on the October 28th and November 4th options chains, and we're going to take a look at that pretty soon here. But I just wanted to show you guys that we are starting to see higher participation in the options market. Okay, now yesterday, probably prematurely, I said that most likely, oh, look at that, it shifted. Okay, so yesterday, remember how these two big gamma spots were shifted 100 points down? It was at the 1300 and the 1400. Now it's at the 1400 and 1500 zones. It just shifted. The positive gamma zones shifted. Okay. And it's still for the 28th. Yeah. A lot of that shifted. Oh. But also, what is this color right here? I'm trying to see what that color is. That pink one. What is this? Deribit's going to make me do all this. Oh, 1111. Okay, so that's 1111. So, well, okay, but anyway, outside of 1111, though, on the 1400, a lot of that positive gamma is in the October 28th. We're seeing a lot of positive gamma on the 1500. So now it looks like our range could be 14 to 1500. Guys, those ranges based on gamma, it assumes that there is not going to be all these orders that knocks that out of that gamma range. All right. It did. So now, remember yesterday it was like 6.8, 6.9 billion, and now it's at 7.4. So we had $400 million in options order flow that could potentially have knocked this a range out. So as we can see in the gamma, it did shift. It went from 13.14 to now 14.15, and your negative gamma is right between at 14.50. Yesterday, it was the negative gamma was around here. It was around the 13.50 or so. All right, so everything shifted up about 100 points, which is very interesting. All right, so now our range is at that 14.15. Already, ETH is already above that already, 15.38. So I'm not sure if there's more options order flows coming in on the call side, because it does look like a lot of that is coming on the call side. All right, so that. Yeah, it's all on the call side right here, all the options order flows. Let's actually take a look at the chain itself. And see if there's any block orders. Sometimes when the New York Stock Exchange opens, Deribit will suddenly have all these order flows coming in. Not sure if some stock traders are involved in this as well too. Oh, come on. It does this. I don't know why in the mornings Deribit sometimes has these issues. Dang, come on. Okay, well, maybe next time what I'll do is right before the opening bell, I'll take some snapshots so that we can see what happened. I mean, I'd like to see real-time data, but Deribit always does this, especially during the time that we have the morning market memo. I don't know if it's a traffic. Okay, well, we'll take a look at that later, okay? I'll take some snapshots of this, or maybe I'll give you guys an update throughout the day on Discord. But yes, anyway, the important thing here is Ethereum, the open interest is increasing. So we're starting to see a lot more participation. I think now it's worthwhile for us to take a look at the options market again in Ethereum. So I'm going to be tracking that very closely. We still have our buy for Ethereum. You know what? Ethereum, I'm really happy about that trade. You know, I thought out of all the trades, that was my really iffy one. I really thought that, man, I might get punked out of this Ethereum trade. It worked out really, really well. Our levels, this level worked extremely well. And again, guys, patience pays. We've been waiting for this level for how many damn months? I mean, you know, we were waiting for this for the back end, what, June, July? We were talking about this green line, like, ooh, if it gets there, maybe we buy, maybe we don't. We were talking about the, you know, ETH gold line. And this was, you know, a line that we debated about for probably months. And we got to it. We pulled the trigger, and it's working out really well. We're up about 20% on that trade so far. If I could, I would be selling covered calls at 1650, but since I don't have the ability to sell covered calls because Deribit doesn't allow American individuals to open accounts, I'm probably just going to take profit at 1650 and then try to reload on some longs at lower levels, probably at this green line again. So if we get to 1650 and it drops back to our green line, I'll be buying at the green line, selling at 1650. Okay, until liquidity data changes. If the liquidity data keeps improving at 1650, I'll hold my Ethereum. So that liquidity data, you know, junk bonds, New York high low, all of that matters. Okay, all of that matters for risk on, risk off. All right. So that's been working pretty well. TIP TLT, let's go back to bonds for a second. TIP TLT, it is breaking down. Okay, so you know, we said that if we can see a false breakout, okay, so on the weekly chart, if we want to see a false breakout, this needs to really come down this week. If we want to see a monthly chart false breakout, okay, you know, by the end of the month, it would be ideal if it gets back into the box. If this gets back into the box by end of business October 31st, I mean, oof, you know, that would probably be very, very high risk on. I wouldn't doubt if this chart, the IVWIVE chart, actually turns around if that were to happen. Okay, QQQ might become stronger. All right, I'll believe it when I see it. TNX, again, chart of the week, chart of the month, whatever you want to call it. This is a very important chart. Keep an eye on this. If this keeps coming down, that's going to be tailwinds for stocks, okay? So keep that in mind, guys, all right? And that is what I had planned. Anything you guys want to look at? Anything in particular you guys want to look at?
Yeah, I'll go ahead.
Go ahead. Distracted. What did you want to see? I didn't hear you.
I was just going to ask if do you think the ETH rallying is due to the stock market rally, or do you think it's due to the news that ETH is now deflationary?
It could. I don't think it's been long enough for the full effects of the deflationary effect to be felt. Although I believe MSC, you track this very much. You told me that there were a significant amount of ETH burned. I mean, nominal value wise, it seems significant, but I think if you look at it at the total ETH quote unquote market cap, it really wasn't all that much. I think the deflationary effect could be one thing, but also too, I think a lot of it has to do with risk on. I mean, we're already seeing it, with the options open interest, it was down. Remember, it went all the way down to like 5 billion, all the way from 8 billion to 5 billion, and now we're seeing that kind of, definitely ETH calls. I mean, it's no argument here. ETH calls is as speculative as it gets. All right, and so just seeing more and more of that speculation with our liquidity data changing as well, I kind of think this is more of a macro, a bigger picture move than it is just about ETH. I think this is more about risk on versus risk off, as of now, at least. That's my.
Do you think that you would be able to see a difference in Bitcoin price action to ETH price action if there was like an impact for deflationary?
Say that again. I'm sorry. Say that again.
Do you think that the deflationary news, if it did have an impact, you would see the difference in the Bitcoin and Ethereum charts?
Well, we're already seeing that. Look at Bitcoin. Bitcoin is kind of flat, right? It's kind of in a box. For those of you into TA, this is what they call a Darvist box, right? This could be a Darvist trend reversal box. If you look at ETH is, I mean, I guess you could say that's a box, but I would say that's more of an uptrend, right? If you look at the lows of June till now, and the lows after September, it is in an uptrend, whereas that uptrend is not as pronounced in Bitcoin. It's more flat. From June, July, September, October, it's flat. Whereas in ETH, it's actually trending up.
If you open the link I sent you in the voice chat,
okay,
you'll see that chart almost correlates with the burn rate over the past week since the merge.
It correlates to the burn chart. Burn. Oh.
Go up.
Go
Scroll
up.
Mm-hmm.
Oh, this one right here? Oh,
Go
yeah.
up higher. It should be the top. More. Right, up, right, no, up more, sorry, at the top, right there, that one. You could see right where it peaked, and then it's been deflationary since then.
And when was this? October 8th. October 8th? I'm just curious. I'm very curious now. Okay, wow. You know, once it starts getting deflationary, look at that. This bottomed out October 2nd, October 4th. So did this just front run? Did the options market just front run this chart?
It's possible. You could see it starting to slow down.
Yeah. Okay. Interesting. If this starts slowing down and topping out, that would be very interesting. As this bottoms out. Okay, I'll monitor this. This is great. This is great. I'm gonna add this to my bookmarks watch list. I'll study this a little bit more. And tomorrow, on our crypto section, I'll try to study this and see if there's any relationships that I could build. If I can't find out by tomorrow, I'll report to you guys on this next week. That's really interesting. Good sources. MSC, thank you for that. And Distracted Dad, thank you for the questions. That's great question. Anything else you guys want to look at before we go? Going once, going twice. Okay, well in that case, that wraps up our session of the Morning Market Memo. Our Discord invitation link is in the description. Come join our Discord. Be a part of a growing community. No sub fees, no paywalls. Of the people, by the people, for the people. If you enjoyed our video, hit like, follow, subscribe, comment. Show us some love, baby. All right, we'll be back again tomorrow. Market open, 9:30 a.m. Eastern time. See you guys then. Trade safe, guys.